But welcome, everybody. Thank you very much. Looking forward to this immensely. Wow, what a week as far as the press is concerned. Yesterday was blanket, whether the newspapers, the radio, TV, on demand for property, which is obviously where we come in. One stat that they kept repeating was in 2019, there were 6 applicants per property. In May this year, and that's countrywide, by the way, in May this year, it was 20 applicants per property. This is rental. And then the stats yesterday were 25 applicants per property. I know it's a difficult one, but that's where the demand is. And, LBC yesterday, my favorite radio station, must have featured on it for about 4 shows. So that's where the demand is coming from. People are still joining. Thank you very much. So that's that. Also, just want to make it clear, at Holborn, we work very closely with 7 or 8 introducers that we've DD'd, etc., etc. We work very, very closely with. Obviously, Greg's on from Global Residential. So what we do is, with our wealth managers and with our clients, is to dovetail what the client is looking for, where they're looking for, what the purchase price is, and then work closely with our property partners, Greg obviously, to actually give all the information across and proceed with the sale. So I just wanted to make that clear and how it works. Pete, you're sitting in London. Not sitting, you're walking around the streets of London, as I mentioned. You're in Kensington.
Yes, I'm in Kensington. I've been looking at a couple of properties up here, which are going to be interesting to everybody. So I do apologise for, I don't know if you can see me or not, because I can't see myself. But I'm in the streets of Kensington. And I was just saying to everybody, just as you joined, that the sentiment has picked up fantastically over the last 3 or 4 weeks, and in particular the last 2 weeks. I would say we're seeing 3 times as many proper inquiries for property than we were 3 or 4 weeks ago. Would you agree with that, Chris?
100%. This week has been, I'm not going to say phenomenal, but what an uptick. I think, and I say this with all humility, and I'm touching wood and I'm crossing my fingers, but today should be a really, really good day. I know, Greg, you've got 2, well done, Edward, that may come off today in Manchester, which we're going to be talking about in a minute. So, Pete, I agree. The sentiment is there. And I know I guess you've parked up your Ford Anglia, Pete, and using the train.
Yeah. London taxis? No, I've gone and parked in Westfield. I'm then going to catch a taxi back to Westfield and then drive back to Southampton.
And what have you said? I mean, London is doing extraordinarily well, and anyone that looks at our website will see we've got some lovely properties in London, as well as up to Edinburgh, down to York, Manchester, which we're going to be talking about in a minute, Birmingham, London, Slough, Brighton. They've all been carefully DD'd. So, Greg, let's hear a little bit about Manchester and why you think it's going to. Well, it is flying. We know it's flying.
Yeah, it is, and I'll just sort of echo what Pete's just said as well. I mean, we've got a very similar sort of graph, if you like, in terms of inquiries and business levels, and certainly the last 4 weeks. I think obviously since you've had a lot of news of mortgage rates reducing, sentiments coming back, I think the whole doom and gloom that the UK market was going to fall off a cliff has clearly not come to fruition, and that confidence is starting to come back. So whether it's a project in Manchester or something that we have further down south or further up north, it feels like it's getting back to the good old days.
Oh, that is great. I mean, I touched on the rental demand in the UK and the fact that it's got to build 500,000 properties, which they've got nowhere near doing. Which is obviously where we come in, but obviously a lot in the press as well about Manchester and Birmingham and HS2. But the conversation is all about property. So, there we are, economy. That's an interesting slide.
Just a few key bits really for the people watching in terms of Manchester, and why it continues to be a solid base for investments. I think if we were having this conversation a number of years ago, it was all London, and I think that focus is now shifted. If you just look at just the economy, forget property prices at the moment, just over the next decade, they're expecting the economy to grow over 25%, which is huge, largely driven by the fact you've now got 80% of the FTSE 100 companies based in Manchester. Some big brand names that most people are familiar with: Unilever, Amazon, Google, BBC. And then what's really interesting when you look at the stats, about 30, I think it's actually quite higher now since we put this together. But sort of 15% of the people that are leaving London are heading to Manchester as their sort of preferred base. I think that's largely driven to the fact that, no one really needs to work in an office nowadays 5 days a week. I think probably the HS2, when you just touched on that for a second, when that sort of got proposed, what was it, 10 or 15 years ago now? I think the big key driver for that is that, everybody was heading to London for business. And I just don't think that is there anymore. People in Manchester work in Manchester, live in Manchester, and actually people travel to Manchester. So, yeah, having that HS2 line direct into London, I don't think is necessarily a massive need for Manchester, and actually spreading those funds out to improve the sort of more northern rail links between cities, I think is a really good idea. So yeah, from an economic standpoint, we're very bullish. Obviously, education wise, you've got a lot of university students. You've got 5 of the sort of top universities in Manchester as well, which attracts a good level of students. So yeah, in terms of how that's reflected in prices, you've had 70% increase over the last 10 years, which is huge. And people do say, well, I haven't missed the boat. And I think in certain areas of Manchester, you probably have. But when you look at the average price in Manchester versus the average price in London, considering that potential economic growth that you've got coming in Manchester, I still think we're way off the top.
Can I just say, Greg, as well, that it's really important that we keep messaging this, but property is a medium-term play. It's not about what happens today or not even next year. If you take any average over any 10-year period, it always goes with you. Time is your friend in property. And what you're going to see is the 10-year trend from today will still deliver stellar results. There's a couple of other interesting stats, and it backs up what you're saying, Greg, about people and working. In London, Property Week this week had an article stating that operational transactions of office buildings in London had gone down 73% in the last year. These are the very large floor plans. So when you go across to the city, there's now nearly 2 million square foot of purpose-built modern offices that are not occupied. That's because people are working from home or doing 2 days at work and 3 days at home. So that market is actually fueling the likes of Birmingham and Manchester, because the people are going, well, I don't really need to be in London. I only got to do 2 days. They're then convincing their employers to allow them to do Zoom calls on those 2 days as well with the London teams. The space in London is not getting taken up, which is actually really good news for residential property.
Yeah, and I think further to that, Pete, as well, because you just touched on a sort of good bridge for me, really, is that, not only has the sort of location requirements changed, the actual tenant profile in terms of what they demand from their properties changed as well. Yeah. Sort of pre-COVID, people were pretty happy renting 4 walls, a window and a door because they were in an office 10 hours a day. Whereas now, people are working from home 3 or 4 days a week. They demand more from where they're living. So they want things like a gym. They want gardens to go and walk in. They want, if possible, some co-working space. So they want more facilities in sort of where they're residing on a day-to-day basis. So I think that is, again, shifting certainly requirements for developers. And for the likes of ourselves, it means that when we're going out and getting stock, we're very conscious of, what facilities these apartments have, especially in places like Manchester and London probably as well.
And especially what you're finding is as well, there's more interest in the 2-bed units where they're using one bed as a bed and the other one as a physical office. And certainly even the 3-bed units where you might have co-sharing between, in particular, ladies seem to quite like co-sharing as long as it's 2-bedroom, 2-bathroom. So they always want their own bathroom. This is what we've been finding. And but then a 3-bed unit with 2 bathrooms means they've got an office that they might share, and they've got then their own bedrooms and their own bathrooms. That's also proving quite popular. So it is a shift in the type of stock that is attracting.
Absolutely. Yeah. Chris?
So, Greg, we're going to touch on some of the other properties you've got. I know this is ostensibly about Manchester and the new launch, but we are going to touch because we've got a lot of interest. I'm not jumping the gun on one of your developments in a place called Wellingborough, which is 55 minutes outside of London. There's a lot of interest on that because it's completed stock. Yeah. But let's have dig a little bit deeper into Manchester and what you've got there.
Yeah, so as I just explained, the tenant profile changed, and although our head office is actually based in Manchester, we've actually not had a huge amount of Manchester stock because we've been really careful to take on the sort of almost perfect project for us, which consists of that sort of bullet point list there. We always look where is the regeneration activity going on, because from a client perspective, that's where you're going to get a lot of that future growth. The design-led buildings with facilities, as I've just mentioned, to cater for that sort of new tenant demand. We obviously want to make sure we have a very, very strong developer on the project. We're all aware of interest rates rising across the world, puts a lot of pressure on developers and contractors. So you've got to be careful that when you are choosing a big development, you've got a good strong developer on it. So we wanted to make sure we had that box ticked. Because of where the markets are right now, we wanted to make sure we've got some form of client-friendly payment structure so people weren't having to maybe find 25-30% on day one, to sort of make it easier on cash flow. And any sort of extra layer of security we could find on a project, we were looking for. So some would say that was quite a sort of intensive shopping list, so to speak, but we waited, and eventually we found. So obviously, I'm super happy to be introducing it as sort of a hero project for Manchester. The project really is part of a wider generation. So what you've got is the Manchester City Council looking to expand the Manchester city limits. For those of you that have been to Manchester, although there's lots going on, there's 80% of the FTSE 100 companies there. It is, for all intents and purposes, quite a small city, in my opinion, certainly when you narrow down to the city centre. So there's this big drive to sort of expand the city limits, create new housing, as Peter alluded to. There's a shortage of housing across the UK. So this project specifically, it's a Manchester City Council-backed project to develop 15,000 homes over the next 10 to 15 years. £1 billion worth of investment with a £4 billion sort of value at the end of project completion. There's a new £51 million City River Park going in there, which will be a fantastic sort of addition to Manchester. You've got new schools, healthcare facilities. It's planned to house about 40,000 people, and it's currently the biggest renewal project in Manchester, but also one of the biggest regeneration projects in the north currently in process. And that project's going to be split up into 7 different suburbs. And we're fortunate enough to be at sort of day one in that whole regeneration, which is Victoria North. And Victoria North comprises of 3 different buildings. But before I get into that, and going back to that developer sort of statement that I made, the developer that's been brought in, not just for the project that we're involved in on day one, but also that whole master plan project, is the Far East Consortium Group. So when clients are looking at this as an opportunity, you've got a developer there that's been listed on the Hong Kong Stock Exchange since 1972. They're extremely well capitalized. They operate in 10 countries worldwide. And as I said, they've been brought in not just to develop, the one building that we're going to discuss today, but that whole 10 to 15 year project. So it's a huge project. Obviously, it's a long-term project, but for anybody that's in there on day one, it doesn't need a rocket scientist to tell you that that's where you're going to get the sort of long-term growth and benefit from. Yeah.
And of course,
there's just one other little thing, Greg. If I can just add one little tiny thing that was in our Property Week again this week. Manchester Council have just given planning permission for a 4,000 unit PBSA, that's student accommodation unit. And what that does, it feeds the market later on, because people go to university in Manchester, they then finish their education, they then gravitate back to where they've been training. So that's also going to mean that the long term or the medium term in 4 and 5 years' time is going to be stronger again. So I just thought I'd mention that.
I was going to mention, Greg, that Manchester's probably got the best mayor in the UK, in Andy Burton. Forever in the news and top tipped, I should say, to be a future prime minister. So when you've got somebody like that behind Manchester and the growth, you've got confidence as well, because he's quite a superstar, isn't he? I don't know if you know him.
Yeah, no, absolutely. I don't know him personally, no. But yeah, I mean, what he's already done for the city is amazing. And like you say, what's been signed off and the future developments and the future projects, also absolutely fantastic. So yeah, you've got somebody really in charge there that wants to grow that city, grow it properly. And as Pete alluded to, make sure that they're attracting good quality students that will essentially be the future of the city. So yeah, just wanted to give the viewers really just a sort of an idea of where we are. So yeah, Victoria Riverside, this is going to be essentially suburb 1, which is going to house the first 3 towers. You've got Park View, City View and Crown View. Crown View being the tallest of the 3 and is really going to stand out as the sort of hero development there. In terms of location, your 4-minute cycle or 8-minute walk to Manchester Victoria, and an 8-minute cycle to Manchester Piccadilly, or a 17-minute metro journey. So you're well positioned for both of those trains line. You're 8 minutes into Salford Central, 15 minutes to Old Trafford, 10-minute walk to the 15-minute walk to the Northern Quarter. And obviously, for those that are travelling in and out, you're pretty well positioned for the Manchester Airport as well. What's quite interesting, obviously, with this whole regeneration, though, and sort of important to note, is that Crown View, as part of Victoria Riverside, will always be the closest towards that city centre as part of that regeneration, because everything is going to be built, obviously, from here and back down the River Irk. So, for investors getting in on day one, you're always going to be the closest to the train station, always the closest to the city centre, and therefore you should expect to see the largest uptick in value. So, yeah, fantastically positioned in terms of location.
And on top of that, Greg, Greg, for those people around the world that have tuned in, and thank you, you're only 30-minute drive to the Lake District, which in my opinion is probably the most beautiful part of England, and only a small hop and a skip across to Wales. It's an ideal situation, isn't it, when you're up there? Beautiful part of the world.
Yeah, I mean, I'm not sure how many people are making the journey to Wales, Chris, but I'm sure there'll be a couple.
I think some people like it.
Yeah,
they go to the rugby.
This just gives you a little bit more of a sort of zoomed in sort of oversight of Victoria Riverside. So, as I mentioned, you've got 3 developments here. You've got Park View, City View, and Crown View. Going back to what I said earlier about the sort of, the gardens and being able to, get out and get some fresh air, do some training, do some exercise, do some walking. As part of that whole development, you've got City Gardens, which is accessible for all 3 residential blocks. However, within Crown View, you've got Crown Gardens, which will be exclusively for the residents in Crown View as well. So they are very focused on making sure that is seen as the sort of pinnacle hero development with its own private gardens. But as you come out of the front entrance of Crown, which was here, if you can see my cursor, and I'll show you a little bit more detail on another slide, over this river here, and it's just being constructed. That's where that £51 million investment to City River, or the River Park, is going to go. So residents of Crown View will be able to walk out straight over the bridge and into this huge, beautiful new parkway as well. So the reason why that's important, apart from obviously looking really nice, when you're looking to rent out your apartment and people are looking at it and going, okay, what do I want? Okay, this is what they're going to want. It's going to fetch good rental yields. It's going to rent very quickly because people like being close to parks and they like the facilities that go along with it. Just to give you an idea of the actual size of the building, so there's 275 units within Crown View, 36 floors, mix of 1, 2 and 3 beds, although limited on the 1 beds, mainly 2s and 3s. What's quite unique to the development, as you'll see from the CGI image there, you've got these huge picture frame windows, and you've also got dual aspect views over Manchester as well. So I know I've been in the industry for a while and looked at a number of properties. Often when you look at these kind of developments, you've got these, kind of small windows. They offer some good views, but to get big picture frame windows like this is just a stunning addition to what is a fantastic building as well. So yeah, you've got dual aspect views over Manchester. And as you can see, that's been delivered with that floor plate. So it's not just sort of a square block. It's almost like a flute shape, which again gives it that dual aspect viewing So again, from a tenant profile perspective, they're going to really enjoy that. They're going to stay within the apartment. You're going to get repeat contracts, and all these things you've got to take into account as an investor, right?
I imagine that the 4 corner units are going to get the most interest. That's TA 005, 4, 1, and 8, because of the dual aspect. Yep. Would you agree?
Yeah, you're not wrong. I mean, they've all got dual aspect, regardless of whether you're on corner or not. So you've got the sort of angular views out of T07, as you can see there. So they've all got the dual aspect views, but everyone likes a corner. So yeah, typically the corner units will go first. However, again, you know, those central units, they've got the dual aspect views. They've tried to make every unit as appealing as possible from an investor standpoint and a tenant profile standpoint as well.
So I'm going to try and catch you out here. So if you just go back one slide before we go, I know you've got the prices later on, but I'm just going to play devil's advocate here. So something that on a corner, say TA 004, purchase price from, off the top of your head, never mind the floor, but from?
That would be from...
So that's a 2-bed.
350, 354.
Right. Okay. All right. Next slide, please.
And obviously the higher up you go, and obviously different aspects will fetch different prices. I've got the sort of at the end of the presentation the sort of rough guide to the pricing. So
yeah, I maybe threw you under the bus there, but I know a question's just come and said, Chris, what are approximate prices? So please, by the way, if anybody has got questions, Kieran, please put them in at the bottom of the screen. I do like trying to catch Greg out. Sorry, Greg. Next slide, please.
No, look. I think, you know, whilst we're on prices, and again, I know you and I can spitball these things rather than just go in full presentation mode. But you know, whilst you are on price points, I think it is important to note that, you know, the 2 beds here do start at 350, and then the 3 beds pretty much around about the 450 mark. A client of mine, we were discussing, I think I mentioned this to you not long ago, you know, bought a 2-bed in Deansgate, literally around about 26 months ago, 2-bed for 350, 26 months ago. That's just been revalued at 465, literally just over 2 years later. There's a student in there. Yeah,
Greg, that's yours. That's your property you're talking about, isn't it?
It's not my property. No, it's a client's property.
Okay. Sorry,
but yeah, there's a student in there. They pay the whole year up front in one check. And as Pete alluded to about the rental demand earlier, you know, 3 months into an existing contract, and they're already asking to pay next year's as well. So that's how keen they are to keep hold of the apartment. So yeah, 350 value 2 years ago. These are 350 today with a completion date of sort of 2 years. So this really is a true value play for any investor looking to buy Manchester real estate. You'll see again just a couple of the CGIs there and how these dual aspect views work. It's probably easier to see it on the right hand slide, but that's the sort of view over Meadowside, and then another view facing a different direction. I think you'll agree, look absolutely stunning. And then, you know, back to what I said about that tick list, you know, we wanted to make sure that, you know, we had a building that was full of facilities. So Crown View has, you know, concierge lobby for, you know, tenants to hold meetings, to go and relax. You've got the co-working space, which will be delivered as well, again, which will be free for tenants. So rather than, you know, having an office in your house, you can come downstairs, plonk yourself into the co-working and work from there, which I think is an awesome feature considering where we are in the world right now. It's got its own private residence bar. This can also be hired for private events as well. If you're a tenant within the building, make it attractive. It has its own residence gym and yoga studio. And also, as I mentioned before, you've got the Crown View podium gardens. So it really is full with every facility that a professional tenant would want. I added this in because I was at the site actually last Friday, just to give you an idea of what I mentioned about the park. So if you remember a couple of slides ago, I mentioned the entrance to Crown View being here and the park being here. And hopefully this feeds through. Is that moving now for you, Chris?
Yeah, makes me giddy.
Yeah, so makes you giddy. You don't get car sick, do you?
Yeah, so I don't move.
But you'll see. So here's your entrance to Crown View. And again, just opposite the road is going to be the bridge, and you have all of the new park going into this area here. So, you are literally a stone's throw away from the new park. This is just a couple of images again I took last Friday. This was from a bar called 20 Stories. I don't know if anybody's ever been to Manchester, but you'll see how sort of prominent Crownview sits, and they have now reached the top. So although this is a new development, it's off plan. Again, clients should feel comfort that actually they have already reached the top of the building. They've been building the building now for quite some time. We've finally reached the peak. And again, you can just see how that sits on the edge of the city limits there. And then just to give you an idea of how that looks on the street view. So that's what it's going to look like. And obviously Crownview being on the right, which we're looking at right now, those picture frame windows going in. And yeah, reach the top and then down towards Meadowside. So they really are moving at a rapid pace. So are the sales. Now the sort of mortgage rates have softened a little bit. So yeah, fabulous development, and it's when you're there, it really is a beast to be contended with.
Greg, just got a message in from a regular viewer. Thanks, Kieran. Great to see you there. I know Manchester quite well, but for those that don't, it's worth pointing out this city has changed for the better over the last 10 to 15 years. It's a vibrant and easy to get around. And that's from Kieran, who's a regular viewer on the show. So thanks, Kieran, for that. But yeah, I mean, enormous changes, aren't there, in Manchester? Enormous.
Yeah, absolutely huge. I mean, this is just a video just to show you what it's going to look like when it's finished. And yeah, there's been loads of change. I was in Spinningfields, which is where our office is, the other day. That's, absolutely amazing. There's new restaurants and stuff going in there. I think Sexy Fish, which is one of the sort of, top restaurants in the UK, has just been placed there. The whole of Manchester is just going to continue to grow and grow and grow. There's no signs of slowing down. And as I said on that first slide, when you compare it to, your price point in London, you're still way behind, which again, from an investor, when you're trying to keep your costs down, you want to try and keep your purchase taxes down. At 350, versus buying a London property, you're going to be saving quite a lot on the tax purchase as well. That just gives you an idea, Chris, back to your sort of original question. So these are just some of the units that are currently available. Everything from the third floor right the way through to the top. I haven't included some of the 3 beds, but it just gives you an idea of some of the units that are available. And again, one of our boxes that we wanted to tick was a client-friendly payment structure. And because FEC, as I've mentioned, they're a listed developer. They're not using, client deposits to build. As you can see, they're already racing ahead with the building. What they've managed to structure for clients is, in my opinion, extremely attractive, which is a 10% deposit, like now, 2023, another 10% in 12 months' time, so November 2024, and then on completion, July 2025. Obviously, the balance would be due. So, if at that stage you got a 70% mortgage, you'd have to put another 10% down. If you got an 80% mortgage, 0. If you got a 60, another 20. Or if obviously you were a cash buyer, just the rest on completion. So it gives clients an opportunity to secure a unit and probably, I'm not speaking out of turn here, one of Manchester's best new developments coming to market, for as little as 35 to 40,000 pounds this year. So for us, as I've put in the bottom right hand corner there, it ticked all the boxes that we required.
And also fairly unique, isn't it, to have that payment structure? Okay, for those people in other parts of the world, I'm sitting in Dubai, then we're used to that, but it's a very friendly, helpful payment structure. And I always add at this juncture, always talk to our mortgage experts. If you're in any doubt, we just like to make sure you got a decision in principle. I say that every week, I know, but I think that's a very, very, very good selling point for people, that 10%, 10%, 10%. I really do.
Yeah, I agree. I mean, if you look at it to sort of comparable projects in Manchester, most of them are presented at 20, 25 or 30% that's due today. So, again, if you've got somebody who's sat on a load of cash, maybe not so much of a problem, but, with interest rates now in the bank not being too bad, to be able to put 10% down now, keep the rest in cash, another 10% in 12 months time, and the rest pretty much in 10 months later. I actually think it gives clients an opportunity to really nicely cash flow their purchase, make sure the legals can be done correctly, do more research on Manchester. And then a final point on that, Chris, when it comes to handover, we have our own lettings and management company. So they will work with the client to make sure that they go and get the best tenant possible. And they'll talk to the clients about whether they'd need a furniture pack, whether they wouldn't need a furniture pack, help place that tenant, and then manage that on an ongoing basis as well for them. And of course, because we're based in Manchester, we know
that's Crown View. Is that the end of your slides for that? Can I ask? I know we should prepare.
It is on Manchester.
Right, I'm going to go a bit left. I'm going to go a bit left wing here. Whatever. Thanks, Kieran. And talk about others. Wellingborough. Now that's created. Sorry for jumping around, but Wellingborough has created so much interest. I think it's a great project. 55 minutes outside of London on the train. It's near Cambridge, which I obviously know well because I went to Cambridge. I drove through it anyway. And also with the guaranteed rented out, as I say to people when I'm talking to them, you get what it is on the tin because it's already rented. It's completed, brick built, nice location. What would you say about Wellingborough and how's it going for Global?
Yeah, like you said, I mean, interest was peaked immediately when we launched it. If I'm totally honest, probably the timing for us to launch wasn't the best, because it's a completed development, because there's tenants in there already. Clients were having to buy and exchange and get mortgages straight away. And of course, we launched it in June, July, right? So, there probably wasn't a worse time to be looking at getting mortgages. So I think if we'd have launched it, now or 12 months ago, it has sold very, very quickly. But yeah, I mean, it certainly suits a cash buyer that's looking for immediate rental yield and security and some capital growth. And even now, to be fair, with people looking at mortgages, because you've got that tenant already in there, you know what your rental yield's going to be. And even on a 6.5-7% mortgage, which I don't believe we're probably going to get, it's probably going to be lower than that now, but you're still cash flow positive. So yeah, great development. I mean, I'm quite more than happy to share my screen and show you if you want, or we can just sort of spitball like that. Up to you.
No, I mean, I want people to sort of come back to either me or their financial advisor or direct to you. But I just wanted to touch on that. I don't need you to do the whole presentation again. I think there is one on our website anyway. Can I move down to Burton on Trent, which has been such a winner for you? It's such a winner for us as well, by the way. I particularly like Burton on Trent. I love the idea of the converted brewery side of it. Coming up to completion now. Any stock left?
Mm-hmm. Yeah, well, we're moving up to Burton, not down to Burton, but yeah. So we have 7 units available. So the last 7 within the development, they are all due to be handed over end of October through to, I think the last unit gets handed over on the 27th. So 7 units left there. Great price point, sort of 146 to the sort of 200,000 mark. Rental yields will be roughly around about 6 to 7%. I think after checking with lettings and management, 6 to 7%. They'll rent quickly because again, it's a conversion. It was an old brewery. So people do like renting those sort of historical sites where there's a bit of a story to it and a bit of character. So yeah, they're just doing the sort of final sort of fit outs of the apartments, but 26th of October through to the 27th of November, they'll all be handed over. Great development, great location.
And price, just quickly, of those 7 available units?
146, I think, is the cheapest, through to 210.
Okay, great. So
and
that's
everything
again on our website, and again there's a webinar on it as well. So that's good. Can I take you up to Slough now?
Yeah, you can take me to Slough. Let's go down to Slough.
See what I did there?
Yeah. So Slough's another interesting one. Definitely going to suit somebody that likes the commuter story. You're 19. I think it's 19 minutes now into Paddington. So you're pretty much in London without paying London prices. You're also only 4 to 10 minutes, dependent on how slow or fast you walk, Chris, into the trading estate in Slough, which is actually Europe's largest business estate. So you can imagine the profile type that you're going to get renting out the apartment. So that is fully completed. It's fully tenanted, apart from, I think there's 10 units in there which are done on a short-term let. Because again, you can imagine the short-term let market is pretty strong in Slough, because you've got these big multinationals in the trading estate. When they come over, they're there for a week or 2 weeks. They don't want to stay in a hotel, eat crap food, etc. They want to be in a decent apartment and kind of have a proper life while they're there. So the short-term let market is strong. So yeah, we've got a number of units available, priced from I think 280 to about 350 now.
Yeah, it's
So
worth
again,
looking at. It's also,
not a bad price point.
You mentioned it straight into London, but also you've got Windsor there, so it's a nice historical part of it. And also they filmed The Office there, which is even more interesting. But it's good. So we've gone from Manchester up to Wellingborough, up to Slough.
Yeah,
I know I'm looking at the map upside down. Still got Greenwich.
Yeah, we've still got Greenwich. Greenwich is the sort of Upper Riverside is an absolutely phenomenal piece of architecture, and that building, you've got so many facilities in there. Crown View is stacked, but Upper Riverside, you've got 2 cinemas, you've got a swimming pool looking over the O2. You have a number of different private dining areas. You've got co-working space, libraries, like everything you can think of is in there. So we've got a range of 2-bed and 3-bed apartments. Again, they're fully completed, they're tenanted already. So again, when a client's purchasing that, they're purchasing that 35, 45, 60,000 pounds worth of income that comes along with it. And we think they're probably slightly under rented, to be honest with you. So if any of your clients do purchase, our lettings and management company will take a strong look at the apartments and maybe try and get extra rent out of that. But yeah, great sized units overlooking the Thames, great location, 2 minutes into Canary Wharf, at a price point between 850,000 and 1.3 million. Which again, you move 10 minutes closer into the city, 1.3 million will probably get you a 1-bed in somewhere like Soho. So yeah, great value for money. So we've still got them, yeah.
That's brilliant. So we've covered 4 completely different areas of the UK. Anybody that's got any more questions? Questions come in. This is a good question. What do you call it? Spitballing. I want to buy in the UK, but my wife wants to buy in Dubai. Now we've got to be careful what we say here, because I live in Dubai and I love Dubai, but I wouldn't buy in Dubai. So Greg, how would you answer that question, apart from divorce?
I definitely wouldn't recommend divorce, having been through one. I think that'd be more costly than buying an apartment in both of those places. But look, I think it depends on the reason why you're buying, right? I think if you're buying it as a home and you're living in Dubai, I'd probably suggest buying in Dubai because rents are crazy. I think if you're looking as an investor, and you want a degree of security, comfort, consistent growth, consistent rental income, I'd choose hands down UK, time after time. You just look at the last 50 years and you've had 43 years of positive growth in the UK out of 50. You've got the average rentals increasing year on year at the moment by about 10 to 15%. Manchester's gone up 20% in the last 12 months. Dubai, obviously, for the last 3 years, I'd suggest has been on fire. It's almost impossible for some people to live here now that they're having to sort of leave. The rents are getting so crazy and ridiculous, and purchase costs are extremely expensive. But you might make a load of money, but you might wake up tomorrow, and you and I have seen it, Chris, we've been here for long enough, where all of a sudden the market drops 30-40% in terms of value. So, you've got a lot of stock coming onto the Dubai market in, I think, 2026 that gets delivered.
There are 60,000 units, whether it be a villa or an apartment, coming on in the next 24 months in Dubai. And a lot of it is being built where I live here. It's extraordinary. And we started off the show, and it is a show, by talking about what's going on in the UK and the demand for housing and newspapers and LBC, Radio 4 probably as well. They've even found out about it. Thanks, Kieran. So, that's where the demand is, and that's why we do what we do. So, yeah, I think I agree with what we said. If certainly I was here, wife, 2 children, I was going to be here for the foreseeable, next to a school, I would buy. No point in renting it to buy. But as an investment, I actually was talking to one of our wealth managers, and I think he's on here, and he's got a client who's looking to invest and buy 12 here, and so therefore I put my 2 pennyworth in there. But
I think to be fair, that's probably a different type of client, right? That's a client that's clearly got a lot of capital. They're very, very strong on their investment. They've probably got a high risk tolerance, and they're probably going to short-term let most of them out and treat it as a business. That's probably not a bad idea, but I think, you know, for your average Joe that's just looking to park money and get a decent return over a mid to long term, I'd be looking at the UK all day. And I don't want to harp on about Dubai, but the risks I see in Dubai, and you might disagree with me completely, but the market's been propped up massively by a lot of influx of Russian money. And if all of a sudden, you know, the Russian-Ukraine, war calms down a bit, and Russia puts in some really, really sort of high value proposition for people to start bringing money back, people could start taking money out. You might have income tax introduced here at some point in time, which will kill off a lot of expats who will go and live somewhere else. There's just and I could go on, but there's a lot of risk, I think, in Dubai, which is unforeseen. Whereas the UK, it's tried, it's tested, it's got a good legal system, and it's consistent. So yeah, for me, UK all day.
Well, I hope that answered the question. Thank you very much, Greg. We run out of time, but delighted to have you on. So we've got Manchester, Crown View. We're down to I'll go down now, down to Wellingborough, Slough, and we touched on those. But you can get more information on our website. That's for sure. Please, if you're a client, contact your wealth manager and find out more. Or you can always just email me at chris.allen@holbornassets.com if you're without any other contact. So, Greg, thanks very much. Good luck. Thank you, everybody, for joining. See you next week doing Birmingham.